Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Patia. In this video, I'll be discussing about the auto sector and the two stocks which can be the next Maruti or Eicher Motors. Well, these two stocks which I'll be discussing, which can move like what the Maruti did, what the Eicher did, and we have seen a number of stories coming on the WhatsApp or on the social media or whatever wherever you have read that in case back 15 years 20 years down the line, if you have invested in Eicher Motor and haven't bought the Royal Enfield, probably 350 or 500 at that point in time, could be around probably a lakh sort of rupees. And now, if you have invested in stocks, again, the numbers are very, very different than the income or the profits from the Eicher Motor shares have been excellent. And at the same time, probably if you have invested in I guess that in point of Maruti 800 or a Steam, the same amount you have invested in the Maruti stocks, you could be holding probably higher variant of some of the best cars in the industry. Well, that's all the story in the markets, and it's all into the hindsight, which can where when the stocks can multiply, you never know, and the investment will be fruitful. It's only when it's been fruitful or it's reaped into your profits. So, two stocks where I believe there's a potential that the four wheeler Maruti can replace these four wheeler stocks, and the two wheeler stock Eicher Motor can replace this two wheeler stock. Uh, I wanted you to go back to the sector rotation in case you are an Equitymaster subscriber, in case you have attended Equitymaster conference. I have been highlighting the theory called sector rotation, and sector rotation plays a key important role for an investor, especially trader. It may not affect much because in and out of trade depends probably on the short to medium term, but for an investor who are holding for the stocks or the sectors for years and years, this is very, very important. And I have done a session on sector rotation into our Equity Master conference. Just giving an highlight, if you remember, auto index outperformed between 2003 to 2008 by a huge margin, and it was one of the top three, in the third position of the indices, sector indices being outperforming, followed by banks and IT. We have seen at certain point the stocks change depending upon the weightage, but auto index was one which has changed. Between 2008, just the fall started when they had the recession, and till 2012, uh, auto did nothing. Probably we saw V-shaped recovery coming into the IT index. We saw recovery coming into the banking space, FMCG space, commodity space, because commodity at that point in time was rallying like anything. So auto space between 2008 2012 was in a silent period. Back again in 2012 to 2016, it was one of the outperforming index. I guess between 2012 to 16, probably 14, it gained around 140%. 2014 to 16, it gained around 70-80%. So overall, we saw a huge comeback coming from the auto, and auto and pharma at that point in time were considered as the most of the defensive stocks index, I would say. But yes, they lost its momentum once banks, IT, probably I would say real estate, came back in the second half of 1819, and then the flavor of auto index lost its momentum. We saw Tata Motors correcting by huge margin, and I'm not getting into the fundamental of what the stock have done. Maruti was still and one only stock which has seen a huge positive momentum. But look at the likes of Tata Motors, like of M&M, likes of Ashok Leyland, it were probably I would say the muted one. Hero Moto, Bajaj Auto, still I would say not that great rally. But yes, they witness a positive momentum, but yes, not in a quantum where the banks and IT have recovered. Back in 2017-18, when the highs were formed, and we saw a huge correction coming till 2022. So a cycle of 5 years of rally between 2003 to 2008, a 4 years of consolidation between 2008 to 12, again a rally between 12 to probably I would say the highs in 2017, then a rally of 5 years back with the follow-up of the underperformance of auto index right from 2017-18 to now in 2022. So 4 5 years of underperformance have been seen into the auto space against the Nifty 50, and I believe now it is coming off of its bullish breakout where the structure is seems to. So let's jump onto the charts. What are the charts are indicating? So let's start with the first chart over here. This is auto index to Nifty chart, and as I said, it's been underperforming. Auto has been underperforming right from 2017-18 back in 2022. We saw a consolidation in form of right from 2020, where V-shaped recovery happened into the IT, pharma, banking, you name the sector, and we have seen a huge comeback. Only sector which has seen a major comeback was the auto index. And if you look at right from the August, where the Nifty fell to 15,200, we saw V-shaped recovery coming and the auto outperformed by margins. And if you look at this consolidation between 2020 to 2022, it has been ups and downs, and we have seen a recent breakout. If you look at this green shaded rectangle structure, we are witnessing a breakout, a consolidation above the breakout, and it's been indicate that auto index is now getting ready to outperform against the Nifty for next 3 4 years. And this is the index where I believe the momentum can play. As an investor, you should definitely look at the second chart. If I just look at, this is an auto index chart. Look at 2003 2009, the range breakout happened, and if, as I said, 2003 2006 7 8, the rally happened. We saw a downfall back in 2000, the green shaded, the breakout happened, the rally resumed again in 2017-18. It had underperformed, and now again, if you look at this green lines, green shaded rectangle structure, the breakout has happened onto the price action over here. So I believe, yes, with this breakout into the momentum and the resumption in the bullish trend can be on cards. As an investor, you should definitely look this chart pattern, and I believe this structure is coming back very very strongly onto the bullish side. Third chart which I want to highlight over here is that once first which stock which could replace Maruti is the M&M. Now, again, I'm just focusing on the Maruti by auto index and M&M by auto index. If you look at the left hand side of your screen, this is Maruti by auto index. Why I'm comparing with the auto index? Because this stock is from the auto index. And if you look at right trend between 2016-17, the breakout happened, the red line breakout happened. Maruti was one of the outperforming stock. As I said, Tata Motors underperformed by a big margin. We saw Bajaj Auto, M&M, most of the stocks which have been underperforming against the Maruti. Maruti was leading the index, but yes, with the other weightages down, the index could not outperform. But Maruti under the auto space have been outperforming in that 10 point window. So between 2017 2020 start, we have seen Maruti being outperforming. We had just been shy of 10,000 mark for Maruti, and we saw back onto the downside. But yes, if you look at, Maruti has been outperforming the red lines. Similar structure we are witnessing in M&M, and that's the first sign where I believe that Maruti can be replaced by the M&M, and my M&M could be the next Maruti over here in terms of the outperformance against the share price. Now, if you look at the same M&M by auto index onto the right hand side, we are witnessing the fresh momentum breaking out after a huge consolidation zone. So, and that's the indication that M&M can outperform into the auto index, and we have seen right a rally coming into the M&M from 7,700, 800 back towards 1,300 levels now. It's been consolidating at the higher level, but I still believe this is just a start for M&M, and one should definitely look at. Let's focus on to the M&M chart. What are they indicating? So if I just look at again second chart, the second stock which I believe can replace Eicher is the TVS Motor into the two-wheeler space. As I said, you have been have heard the story of getting investing into the stocks rather than buying the bike. So being a bike enthusiastic, I have been a biker for quite long and riding for nearly 10 years now, being on to the long ride, and I know the pain of holding on to the stock, or rather than exciting a rider who loves to ride for a longer term. So I still believe that bike could be the best investment compared to the stock. If you are a rider and if you love riding for a longer time, so coming back onto the stock, if you have invested in Eicher, and I think TVS could be the one which have a potential to be the Eicher. So if you look at the left hand side, the Eicher by auto index, we saw consolidation between 2003 to 2010, and the Eicher multiplied post 2008 2010 rally, and look at the breakout happened. Similar rally breakout is just on a verge of breakout on TVS by auto index. So we have just seen a fresh momentum breaking and the rally is about to start. We have seen TVS coming from 700, 800 levels to now 1000 plus levels into the 4-digit mark. But this is just a start for TVS Motor. If I just look at the Eicher, the way it has rallied post this breakout, look at this chart. If you look at the bottom rectangle structure, this was the breakout which I have highlighted, and look at the rally out to the Eicher by auto index outperformance. So Eicher was one of the outperforming index, and TVS is just breaking out onto the similar structure into the rectangle pattern. So I believe TVS can be the next Eicher if you look at as an investment. So these are the two picks where I believe Maruti is can be replaced by M&M, and Eicher can be replaced by TVS in terms of shares performance. And this is an exciting start for these two stocks. So let's focus on to the two charts. Why I believe that M&M and TVS are have a potential to rally. So let's look at the first M&M. This is the M&M weekly 3% by 3 chart over here. And if you look at this breakout, we have seen, and if you look at this X and 0, so every X is a 3% move higher, 3% move lower. So O is indicated by downward move and X is indicated by upward move. So if I just look at this green or the black breakout over here, we have seen a breaking out of around at probably 900, 950 levels. And since the stock has never seen back and the rally has been very, very fast and furious. If I look at the historic move of this M&M over here, so look at this historic move. We saw a breakout right at around probably 70 levels. We saw a breakout followed by 230, 240 levels, and now again the breakout is being there on card. So right from 70 to 200, look at 3x stocks, 200 to probably 1000 marks, 5x stocks, and now just a breakout. I believe if I just look at the momentum, there is a potential into this stock where it can see upward trajectory into the post the breakout. Second, if I just look at again the TVS over here, now look at the structure. The similar breakout has been happening onto the point and figure chart. As I said, this is 3% by 3 on a weekly scale. So every weekly scale pattern or to the chart, they are basically the long-term chart. And point and figure 3% is always a long-term chart compared to the 0.25% or 1%. Those who are following point and figure, we understand what I'm indicating over here. So weekly, basically in a layman's language, weekly scale is a long-term chart. And if I just look at the point and figure, 3% by 3 is again a long-term chart. So 3% by 3 on a weekly stands out to be probably I would say 6 months and 7%, 7 months move on to the bar chart. So that's the potential point and figure chart has over here. So if I look at the structure over here, it is been breaking out and the momentum has been very, very bullish since it break out at around 800 mark. We have seen stock rallying above 1100 now. So probably 100 and 1130, 11540 is the level which has been trading at around. And this is just a start where I believe the potential to replace Eicher can be expected from TVS. And the breakout over the long term breakout, right from 750 stock witness around 300 to below 300 mark, coming back with the fast and furious rally, the double top breakout happening onto the scale, the previous highs been taken out. The structure seems very, very exciting for M&M and as well as TVS Motors. So just to keep a move where the auto index is been outperforming and it is showing a sign of strength. The fresh breakout has been there into the auto index chart. I believe the things may change for auto index for next 3 to 4 years. I'm not looking for a short term point of view where 10-15% move can be expected, but I'm looking at a multi bagger onto this where the stocks can multiply by 100% or 200%. from the current levels, or any dips can be a good opportunity in case we find any. I believe Maruti now been struggling to cross 1,000 marks. I don't know the potential. I'm not looking at the fundamental PEs, the sales order, the production, the market share, but I'm just looking at the price structure as a technical analyst. I believe yes, M&M still has a huge potential to replace Maruti in terms of performance, and TVS Motors have a huge potential to replace Eicher Motors in terms of performance. And again, going by the theory or going by the story, avoiding to buy the cars and avoiding to buy the bikes of Maruti and Eicher, and but investing into the assets like stock of the company. In case you miss that in time, or probably just a hindsight story, it is still an opportunity to M&M and TVS, rather than buying a car of M&M, or buying a bike of TVS. You can probably invest into the stocks of M&M and TVS Motor. I believe that could pay off. That may pay off into the futures, where the stocks can be a multi-bagger, looking at the structure of TVS and M&M. So these are the two stocks probably I think can replace Maruti and Eicher Motors. Signing off, Brijesh Bhatia.